Returns probably can't stay as high as they have
further
in the last
assets
few
bought at
years.
the right time.
Not only
The biggest challenge is to find the right people.
It's been a very interesting sort of first half for you and SEGRO, but the name change itself. For 80 years, Slough Estates, now SEGRO, a name with considerably less local feel to it. Can you tell me how that's been received in the market?
I think pretty well so far. We had a 99.7% vote in favour from our shareholders, and I think in many ways the shareholders were probably the ones who would have felt most precious about our old name. So with such an overwhelming vote in favour, I think that gave us confidence that we were doing the right thing. And of course we haven't given up our legacy, because SEGRO is an acronym of Slough Estates Group, but we felt the time was right as we become a much more European-based player to have something that had a broader base to it. And the name Slough was actually quite difficult for many Europeans to pronounce. So there's been a lot of good reasons for making the change. It's gone down pretty well internally. No, it's gone down very well internally, and it's gone down pretty well with the press, the media, and our shareholders. So I'm feeling pretty good about it right now.
The name aside, an interesting announcement, one that no one was really surprised by, your disposal of your US interests in the biotech property market. Can you tell me what the rationale behind that sale was, and also the timing? Why now?
Well, the rationale is that as I joined the company 4 years ago, and there was a lot of non-core assets in the business at that time. We've gradually sold them off at the right time in the market, in my view, and I think we've got a lot of credit for getting good prices for our shareholders throughout that process. And as we become more and more focused in our UK and European flexible business space development program, the American business had fewer and fewer synergies. It's now entirely in the biotech market in California. So it's a different group of customers, it's a different type of building, and it's a pretty well a standalone business. And so the justification for keeping it as part of the group became less and less, in my view. So at the tail end of last year, we looked at the American market conditions and realized that real estate values were just about at an all-time high. And it just seemed the right time to carry out a review and, first of all, establish how to exit the US in the most effective and efficient way. And secondly, whether or not it was in fact the right time. So we retained an American investment bank, and we went through a process starting in November. And I think that the 6 months since then has been pretty intensive. And as you rightly said, there's been no surprise that we've actually done the deal. I think there's been a general level of pleasant surprise at the level of price that we've managed to achieve, and we're feeling pretty good. I think we've done a good job for the shareholders.
Would you look again at the US market, or do you have no interest there for the foreseeable future?
Well, I think the important thing is that we've now got great focus in the business. We are in the flexible business space market, we're in the UK and Europe, and that's a very simple model, and the investment community understand that, and I think we're getting credit from the investors for doing that. I think looking forward, we see lots of opportunities in the short term. We don't see any lack of ways to invest our money over the next 2 or 3 years. But there might well come a time when the market conditions in America, in our sector, are particularly attractive. And I certainly, I'm not saying we're walking away from America forever. But at the moment, and for, in my view, the foreseeable future, the UK and Europe is going to offer plenty of investment opportunities for us.
Plenty of investment opportunities. Can I pin you down on that? Where I think the figure of £1 billion has been mentioned as a war chest from this disposal.
Well, we've got £1 billion of capacity in our balance sheet. It's not all come from the US. The US has improved that capability, because obviously we brought some money back from the US and we've lowered our debt ratios. So we have £1 billion available to spend, or a war chest, as you called it. And we see the opportunities to spend that in our development and investment programme, particularly in continental Europe, but also in the UK.
Let's focus on continental Europe, and let's talk markets and sectors. Within the sectors, the markets that you're already in, France, Germany, for example, are you going to be pumping in a lot more investment in terms of acquiring properties in those two markets in particular?
Well, we now operate in 9 European countries. Our original 3, France, Belgium and Germany, are obviously the core of our business. But we've now established bases and development programs in 6 other countries. And in fact, Poland is probably going to be our single biggest country of investment this year. And I think that the fact that we now have such a powerful base in quite a broad range of countries in Europe means that it's difficult to say at this stage over the next 2 years that we'll be putting more into one country or into one location rather than another. We will be opportunistic. We'll look for the right opportunities. In my view, we will end up putting more money into France, Germany and Poland than we will to any other country. But who knows? The opportunities may occur elsewhere.
Will you be entering any new countries over the next year?
I think we might well do. We're certainly looking at Romania, for example, now that it's part of the EC. It's a big country with over 20 million population, and Bucharest is becoming an important logistics and industrial centre. So that's certainly on the agenda. And there's 1 or 2 others that are possibilities, but probably another year or 2 before we get to those other countries.
Do you see the European side of this becoming more important to the company as a whole?
Oh, undoubtedly. The development pipeline we have right now is actually weighted towards Europe in terms of the amount of space we're developing. So I think the balance is going to shift. Obviously, the majority of our portfolio, both by value and area, is in the UK right now. And I think for as long as I'm going to be Chief Executive, it probably will remain that way. But I do think that we're going to be spending more time, more effort, more money in Europe, simply because today the opportunities for good returns are better in continental Europe than they are in the UK. Now, I must just add, however, that we're not going to ignore the UK. There are still opportunities to find acquisitions where we can add value in the UK. We are the biggest, we believe we're the best in the UK in our sector, and we want to maintain that position.
I know it's your job to be optimistic, but how do you feel about things at the moment? Where do you see ourselves on the cycle?
Well, I don't think we're going to see total returns in the high teens that we've all enjoyed for the last 2 or 3 years, because the yield compression clearly has either come to an end or it's coming to an end. But equally, I'm absolutely convinced that we're not going to see a complete reversal of the yields to the sort of levels we saw 3 or 4 years ago. So total returns will come from 17, 18. We've achieved 18.2% compound for the last 3 years. I think if we keep it in double digits to 10 or 12% over the next 3 years, we'll have done a pretty good job. And I'm not uncomfortable about that as a target for our business. I think that we're going to see prime pretty well maintaining their yields as they are right now. Rental growth has been pretty limited in our sector for the last few years, and the forecasts that I think we agree with are that it's going to be around 2%, 2.5% per annum in our sector over the next 2 or 3 years. So we're going to see a little bit of continuing capital growth, and we're going to see rental growth, and I think the total returns are there. But the thing I would also say is that no matter where you are in the cycle, if you've got a powerful balance sheet and you're able to participate in the market, there are always opportunities to add value, even when the capital values are falling. So I'm still optimistic, and you're right. I'm paid to be optimistic, but I genuinely feel that as long as we're careful and as long as we're selective, there's going to be opportunities for us to invest in the UK.
SEGRO, will it ever be up for sale?
I have no idea. My job is to manage the business on behalf of our shareholders. And if at some point an offer comes onto the table from private equity or from another REIT or from another company that is interested in buying the company, if it is at a price that looks sensible, then we have to go and talk to our shareholders about it. But I'm not managing the business with that in mind. I'm not developing and growing the business with that in mind. We are independent, and I have every desire that we remain independent. So we're no more in the market for selling than anybody else in the FTSE 100.